Hello and good morning everybody. Welcome to this week's Gold and Silver Club end of week review, presented by myself, Carr, and Nick Kalsi of the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets. We will be analysing the week's performance. The live session will cover an end of week summary for gold, silver and commodity currencies. We'll be tracking the top trades of the week. We're going through live market commentary and technical analysis, and we'll look at the week ahead, so key events looking forward, and of course covering any questions at all during the duration of the webinar. So this week really we have seen quite a lot of activity on the gold price. So the major news really is the gold price has hit a 1-month high on the Cyprus fears. Gold rose to a 1-month high on Thursday as safe haven buying emerged after the European Union gave Cyprus an ultimatum to raise 5.8 billion immediately to clinch a bailout or face a likely exit from the Eurozone. So it has risen in 5 of the last 6 sessions on resurgent fears about the Eurozone's debt problems and on hopes that the US Federal Reserve will maintain aggressive stimulus to battle still high unemployment. So earlier this week, Cypriot lawmakers, they rejected a plan to tax all public savings accounts in Cyprus to repay their debt of 5.8 billion, and the Cyprus situation has ignited purchasing of gold from the public, who are now becoming concerned that the same could happen where they live. Spot gold rose to $1,660.36 an ounce. We go through that very shortly on the chart on Thursday. It's highest actually since February the 26th. So for the week, gold is set for a gain of 1.5%, which will be its biggest one-week rise actually since November 2011. So this news has really sparked a move to the upside in gold. Gold's 12-year bull run has benefited certainly in the last 3 years from the Eurozone crisis. Since September 2011, fears about Greeks' debt problem sent gold price to a record high of $1,920 an ounce, whilst global equity markets plunged. So the big question now really is, will the Eurozone crisis continue to drive gold prices higher next week? So we'll look at that very shortly, have a look at the live chart. So just a bit of background on myself and Nick Kalsi at the Gold and Silver Club. I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialise in teaching people how to make money from the biggest financial markets in the world: gold, silver, oil and forex. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders, and a regular contributor to a number of financial publications that speak at numerous trading seminars, webinars and workshops. Joining me and the Gold and Silver Club is Nick Kalsi, who is the professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, Nick spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, Nick discovered the formula, the mindset and tools that give any individual the definitive edge to trade in any economy, and also regularly writes a number of global business and financial publications, and we both appeared frequently on financial television. In fact, we were just on Swiss TV, on Financial TV, just last week, doing our opinions on the gold prices, the gold moves currently. And here's just a little bit of background on us in some of global press on gold and silver. So you're in safe hands today. That's just a little bit of background on myself and Nick for those of you who are new to the webinars. Okay, so we're going to look across gold price, guys, and see what the price is doing at the moment. So we have retraced slightly from that 1616 resistance level. So the current spot price of gold is $1,611 per ounce. So if we go into the live chart, we're just going to take a look at the top trades of the week using the Gold and Silver Club signature trading strategies. So These are the top trades we've had this week. For those of you who are monitoring the situation at the weekend in Cyprus, the euro had a big gap. It gapped hugely on the open on Sunday. In fact, you can see here it gapped all the way down to a key price action level just at 1.28759, just above that. And we had a really nice entry point on that to go along. You can see there's a few things are converging or confluencing on that chart. So you've got a key moving average. We had a nice level support and the downward trend line there, all supporting price. So we had an entry at 1.2898 just on Sunday evening, and we had a nice move overnight. It was a nice 71 pip move. The exit at 1.2969. Now Euro USD didn't go the whole way to fill the gap, but that was certainly a nice 3-to-1 trade just overnight on Euro for a 20 pip risk on that. So each lot traded was 200 USD and for a reward of 71 pips, so 710 USD in profit for a 3-to-1 risk to reward on Euro USD. Silver, we had very clear set on silver this week, so we had a nice, you can see that just on the chart, we had a whipsaw in price on the Federal Reserve this week on Wednesday evening at 6 GMT, and the price very quickly recovered, and we formed a really nice, you can see on the screen, the nice hammer, and the entry price there was 28.72 for a risk of 41 points to come out just a resistance at 29.32 for 60 points. So for each lot traded 410 USD, and for each lot the profit was $600. So it was a 1.5-to-1 risk on silver, and silver is just actually consolidating. It's not managed to really break through that level of 29.32. Still quite tightly range bound within silver and gold actually as well, which we will have a look at. Okay, so with the gold price, we had a nice spike. We had again the same situations we saw on silver just on Wednesday on Federal Reserve announcement with Bernanke giving a statement at 6 p.m. GMT. We had the price whipsaw on that statement, came down, tested 15.99, got rejected at that level of support, and presented a nice entry on good setup, strong hammer setup there at 1,604 US dollars per ounce, and for a 50 pip risk there, 50 point risk, so each lot we traded was 500 USD risk to make a profit of 120 points, so 1,200 US dollars in profit for a 2-to-1 risk to reward. Nice quick trade there on gold, just a day trade to come out of that on for 120 points just yesterday. Okay. So that was a nice trade on gold. USD Canadian dollar, which moves, as a lot of you know, tends to move the inverse to gold and silver. We had that sell-off earlier on this week on Wednesday as well, presented a nice entry after it broke support, and entering at 1.0266, exiting at 1.0198, nice profit of 66 pips for a 22 pip risk there, and 3-to-1 risk to reward, so each lot traded 220 USD for a profit of 660 USD. And by Australian dollar, New Zealand dollar, really set up on this. We were looking at this just last week on the FX Street webinar, and you can see we came up to a level of resistance, downward trend, also a key moving average. The price got rejected at that level, did have a nice setup to go short. So entering at 1.2619, exiting at 1.2507 for a profit of 112 pips there. So slot traded 39 pips of risk for 112 pips of profit, a 3-to-1 risk to reward on Australian New Zealand dollar. Okay, great. So what we'll do now, guys, we're going and we'll have a look at some live technical analysis. So we're just going to move across to my charts and we'll take a look at what is going on with the markets currently. So whilst I do this, I'm just going to switch screens. Okay, the first chart we look at is going to be gold, so that should come up just any moment now. Okay, so we're looking at the gold chart at the moment. So the first thing you want to see on this particular chart is that yes, we are still finding very strong resistance at this 1,616 USD level. This is the third time really we've had a test of that level, a major test of that level. since the past month. We had a test there around 15th of February, 26th of February, and this week again, and we haven't managed to break through. So that's a very important level at the moment. The 1616 is a key Fibonacci level as well. 1616 70.72 there, and you can see where the price traders are obviously taking profit at that level as well. Not enough momentum to push us through that level currently, but the price is, you can see we're getting those lower highs as the market is grinding, just slowly coming higher and higher. So we could get, if the market does break past 1616, a bit like a spring being wound up, you could see the market spike higher from that level. It seems to be quite a key level at the moment for gold. So in terms of what we could actually see, that the price was to break out of 1616, we can certainly see price. We've got a whole resistance zone really on gold, which let me just show you that whole resistance zone that we currently have on this market. So if we go into daily time frame here, so we are, if you want to take note of the previous lows that we came to just in January 2013, which are around 1626, around that Fibonacci level. There, we've also got a previous low around the 1632 level as well. So certainly want to take those into account for gold currently. So this is the whole resistance zone that you can find from 1616 to about 32, and then you've got some key moving averages really the price needs to break out from, and got this downward trend which they're all converging here at all complementing, sorry, at around the 1630. So that's going to be very important for gold to break out from. It could, we see a lot of profit taking if the price does break out to that level. It could be that gold can no longer withhold that rally, so we will be potentially looking at the market to win around the 1630 to 1635 level and present shorting opportunities if it falls back in line with the overall trend that we've been in on gold, which is a downtrend. You can see very clearly we've been in this downtrend since the end of September last year. So in order for that downtrend to the price would need to be rejected around the 1630 level. So really interested, keeping a very close eye on gold currently. We're going to see it can break through 1616, so that's really an important level that you want to be looking at very closely with gold over the next few days. So we'll see what news is going to come out of Europe over the next few days. We'll be covering news that just at the end of the webinar, key news that we want to be looking out for, but certainly gold is just consolidating at the moment, so we want to see if it's going to get that spike higher. Okay, so silver, similar situation really on silver. We did have a nice setup on silver earlier in the week, but you can see this whole box really that the price is boxed in at the moment with silver, and you can see 29.30 just below that actually. You can see we've got a level of quite strong resistance there, similar to gold. Where gold is 1616, silver is 29.33. So that's really where a lot of traders are just taking. In fact, where we took profit on a day trade as well, price couldn't break through it. So we are seeing this whole area which you can actually box off where the price is just consolidating sideways and has been doing so for about 4 weeks now. So you can see this whole price. So if we get breakout of this box, we could again see that the price just from 29.33, we may get a nice move to the upside. If we can break out of that, we may not be able to, but if we do, we may just continue to consolidate within this zone of 29.33, going down to support level of about 28.43, just moving between that level. But if we can break out to the upside, and we're going to start looking at possibly getting back into 29, certainly 29.64 be a next key level, and coming back up to early 30, so at 30.40 and then 30.73 would be key levels. And you've got a whole host of moving averages that the market needs to get through. And also the downward trend would meet the price around the 31 level. So quite a lot of interesting event areas that we've got here on silver if we can break above 29.33. So not there yet, so it may come on just some major news which we get from Europe, so we'll be waiting in the wings ready for that. Okay, GBP USD, you want to keep a close eye on GBP USD, certainly pound dollar. Main reason being is that we're coming up to this key area of resistance. We've been forming a base here really in pound dollar. You can see where the price has been rejected a lot of times off at 1.5, 215. Just above that you've got a Fibonacci level So again, price has been, it looks like it may have another attack at this level soon, certainly quite close, and if it does, we'll probably see a spike to the upside, certainly up to around this previous level, price action level, which is about 1.5326. It may be that the price just can't do it. It can't push through that level, doesn't have the volume, and you see the price just come back down and retest the support around 1.5072 and just comes back within this consolidation zone. But certainly we're very close now on pound dollar for a potential breakout of that level of resistance. So that's what you want to be taking, keeping a very close eye on 1.5354 on the pound dollar market currently. Okay, we go across to New Zealand US dollar. New Zealand US dollar looking actually quite interesting on the daily and the 4 hour. So you can see there we put a tweezer a top there just yesterday, and the market actually, we just go back to the daily time frame, got a nice inverse hammer forming on the daily time frame. In fact, you can see the moving average that we bounced right off as well, with one at the same level of resistance as well, 0.83419, and that was a level of resistance which has held previously earlier on in the month, going back to earlier on in March. You can see just to the left here. So that's been quite a nice setup, actually, a position that we are still in. We'll talk about that on next week's trades of the week, no doubt, but we're seeing the price just starting to come down now. You can see that inverse hammer set up, and as the price is now coming down, we've been fairly range bound on New Zealand US dollar recently. Have a nice move to the upside in the last week, but it looks like the market is starting to take some profit and take a bit of a breather at the moment on New Zealand US dollar. We go across and we'll look at Euro USD. Okay, so Euro USD, this is very interesting. So we're starting to get a move now from this. So we've got a key level, Fibonacci level at 1.2875. We were watching this very closely this week. This is where we bounced off actually on Sunday evening as well. If you go back on the chart, see if I can zoom out for you, you'll see this this level provided support back in December, and actually beyond that, it also provided support going back to November last year as well. In fact, we've got quite a lot of bounces off that key level. So here we go, we've got a whole level here, and we've come back and it's forming support as well. Again, this 1.2875 level. So Euro USD at the moment finding support. It is downtrending overall, but of course we could see the market just come back up to the upper end of that channel, which is probably going to take it for the first test anyway around the 1.3 level, 1.3014. So Euro USD finding a base at the moment. Nice setup actually yesterday off that level of support, and we're looking like we may get just a bit of a move back to resistance there. Okay, I want to look at, just quickly take a look at pound dollar, New Zealand dollar, which has been moving extremely range bound over the last, well, really since February. You can see very clearly here how we've got a level of resistance and comes down to level of support, just ranging sideways. We've had a lot of trade shorting opportunities. We've got another short just this week as well. You can see a nice setup, and we haven't come all the way down to this key price action level at 1.80494, but it's still represented just about 280 pips, going all the way down to the low of about 1.8131. That's pound dollar. Let's take a look, pound New Zealand dollar. Let's take a look at Australian US dollar. So Australian US dollar, you can see here, it's staying a upward channel here. You can see as the price has just been moving up that channel, looking very much as a lot of the overall market is seeing a lot of buyers come into the market on Australian US dollar. The centre is certainly up currently. On the daily time frame, we are forming a doji there at a Fibonacci level. We've got two Fibonacci levels there actually, which are overlapping. So the price is starting to wear out. Currently, you can see that just an inverse hammer forming, but the overall trend is up. So we may get a retest of the lower end of that trending channel, which would take us to around about the 1.0378 level. But at the moment, Australian USD is still challenging, but we would no doubt see some potential profit taking at the moment on this market. And we'll take a look at Australian New Zealand dollar. So Australian New Zealand dollar, really nice trade that we were looking at this last week as well on the webinar. So you can see here where the overall channel on Australian New Zealand dollar, the downward channel which has been really in place since 2011 on the daily time frame, on the weekly time frame, sorry, you will see that the price came up again, tested this whole level, this resistance zone, this downward trending resistance, gave a really nice setup just last week. Also couldn't get past the key moving average, and you can see the price just it starts to retrace, puts an inverse hammer, and price has come down, tested the key Fibonacci level at 1.2507 just yesterday, in fact, and that has presented a really nice sell short just from last Friday. Here you can see where the market just came down to our take profit target. So the real key markets to be looking at the moment, obviously pound dollar, I would keep a close eye on that, see if we are going to get a breakout to the upside. We are going to be taking a close look as well on the gold, silver, see if they can break out of, especially both gold and silver, see if they can break out of this whole area of consolidation. 1616 is going to be a key level to look at for gold at the moment, and for silver 29.33 is going to be a key level for price to break out from. And finally, USD Canadian dollar still in an uptrend. It's came back yesterday just to retest a bit of a pullback on USD Canadian dollar, but you can see a very sharp pin hammer set up there where the price has just been rejected. The price has you've got a longer tail on that hammer, and the price looked like it was either going to continue to consolidate or grind higher at the moment on USD Canadian dollar. Okay, so with that, we'll take you back to the key news to look out for next week, particularly on the gold and silver markets, which really could get very interesting over this Sunday open and going into next week as well. So the week ahead, the key events looking at moving forward, the key news items to be looking at. We've got next Monday, Monday 25th of March, 9:45 p.m. We've got the New Zealand dollar trade balance. So very important for you for your New Zealand dollar trade. This measures the difference in value between imported and exported goods and services over that reported period. So a positive number indicates that more goods and services were exported than imported. Higher than expected reading will be taken as bullish for the New Zealand dollar, while a lower than expected reading should be taken as bearish for the New Zealand dollar. That's obviously important because you do see correlations with the New Zealand dollar and the gold price as well. Tuesday we've got US core durable goods. That will measure the change in the total value of, and that's Tuesday at 12:30 p.m. GMT. Total value of new orders for long-lasting manufactured goods, excluding transportation items. A high reading indicates increased manufacturing activity, and a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. And next Tuesday at 2 o'clock, we also have the US new home sales, which again can quite significantly move the US dollar and affect gold and silver and other forex pairs. So this measures the annualized number of new single-family homes that were sold during the previous month. So its report tends to have more impact when it's released ahead of existing home sales because the report is tightly correlated. So a higher than expected reading should be taken as bullish for the USD, while a lower than expected reading should be taken as bearish for the USD, and that's important because of the correlation, of course, with gold and silver prices. The next Wednesday we have the UK GDPs. That'll be quite a big market move, particularly for obviously pound dollar. That's going to be at 9:30 a.m. next Wednesday. That's one for the diary if you trade pound dollar. This measures the annualized change in the inflation adjusted value of all goods and services produced by the economy. It's the broadest measure of economic activity and the primary indicator of the economy's health. So a higher than expected reading should be taken as bullish for the pound, while a lower than expected reading should be taken as bearish for the pound. Then we have next Wednesday at 12:30, we have the CAD core CPI, and that measures the changes in the price of goods and services, excluding food and energy. So the CPI measures price change from the perspective of the consumer, and it's a key way to measure changes in purchasing trends and inflation. A higher than expected reading should be taken as bullish for the CAD, and a lower than expected reading taken as bearish. So very important for your USD Canadian dollar trades. Next Thursday, we've got 12:30 p.m. the US GDP, so another important figure for the US dollar and affecting gold and silver, of course, at 12:30 next Thursday. Measures the annualized change in the inflation adjusted value of all goods and services produced by the economy. It's the broadest measure of economic activity and the primary indicator of the economy's health. A higher than expected reading should be taken as bullish for the USD, while a lower than expected reading should be taken as bearish. And again, that's important because of the USD correlation with gold and silver. So, of course, to request more information, guys, on our gold, silver, and forex trader coaching programs, you can go to www.thegoldandsilverclub.com/course form, or contact us at office@thegoldandsilverclub.com. You can telephone us at the UK office, which is 0207 193 0403, or 852 8191 0403 for our Asia Pacific office. To actually fill in the Learn to Trade form there, just go to goldandsilverclub.com, click on Learn to Trade at the top there, and you'll just get a form which you can fill in to request additional information. We'll send you out some very valuable information on that. And you can, of course, also subscribe to our newsletter at www.thegoldandsilverclub.com to receive free weekly gold, silver, and commodity currency news, live market analysis, and prices as well. So do take advantage of that too. Okay, fantastic. Right, guys, so that brings us towards the close of this week's webinar. So certainly lots to be looking at today. Next week should be very interesting. As I said, we've got a lot of prices are at key levels on the market, so a lot of activity, a lot of potential price action moves to look at next week. So we look forward to see you on the next webinar, everybody. Have a great week's trading, and if you need anything else, do get in contact with us on the numbers just displayed on the screen at the moment, okay? And we'll see you all on the next one, of course. Again, thanks to FX Street and the team at FX Street. So have a great weekend, guys, and we'll speak to you on the next one. Thanks. Bye-bye.